Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm very grateful for life and I'm excited to welcome you to yet another exciting edition of the Forex Morning Mastery as we are going to be decoding the market mysteries and of course exploring strategies and of seizing opportunities using simple parameters such as trend lines, key levels, and of course chart pattern to gain valuable insight into the historical price movements of the assets on our watch list for this week. Well, so far this week we have been monitoring a handful of assets, four to be precise, which includes the US All Spot, the GBPUSD, three assets, the GBPUSD and the XAUUSD, which is popularly known as the gold spot. And in fact, since the beginning of the week, we've been doing fairly well. We've had some significant price movement, for example, on the US All Spot and the GBPUSD in recent times. And lately, we begin to see some traction in favor of the gold spot in the market. So we are going to be taking a technical dissection of this chart to see how we are going to be managing our existing positions while we also use the data we are able to identify on the charts to make a strategic decisions ahead of both the London and the New York session today. For those of you who are joining us for the first time, you're highly welcome on board as I'm very excited to have you around with us this morning. And you might be asking, what is this whole session all about? Well, as technical traders, we gather here on a daily basis in anticipation of the London and the New York session, where we come to review our existing positions if we have any, look at the current market structures to identify potential trading opportunities ahead of the trading sessions today. So this of course happens on a daily basis, 9:05 a.m. West African time, 8:05 a.m. UTC, and I do encourage you to stay tuned in so you don't miss out on any of the valuable ideas we shall be deliberating on today. And of course, the subsequent editions, as the more times you spend with us, the better you become in using the strategy we adopt in this community and eventually be able to use the information you gather in this community to make your own independent trading decisions. So once again, I do welcome you on board. Now, with that being said here, we shall be diving right into the business as usual. And you know how we do our routine in this community. The first thing we usually do is to check on the economic calendar. And of course, you know how important this is. The fact that we need to understand the economic calendar isn't just about fundamental analysis, but it's a crucial aspect of technical analysis too. And by looking at the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed for us to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar, we usually focus on high impact event from the economic docket that affects the assets on our watch list. And basically, since the assets on our watch list for this week are only the US All Spot, the GBPUSD, and the XAUUSD, so we shall be fine-tuning the parameters we want to be seeing on the economic calendar to only the United States and the United Kingdom. Then if we go further to streamline the impact of the event, I would like us to stream it down to the medium and the high impact events so that we can have a handful of events to use ahead of today's trading session. So we are going to be doing that, and if we do that correctly, we should be having a handful of events coming up today, Thursday, October 26th. In fact, we have quite a lot of events coming in from the United States economic docket, hence giving us the anticipation that we might be witnessing some volatility in the market today. And of course, everyone in the market will be anticipating this event, and we've begun to see the anticipation of this event reflect on the chart as price action. So as usual, the first event we are going to be looking at today is going to be coming in about 3 hours from now, and that is the, hold on a second, the core personal consumption expenditure. Well, this event is more or less like measuring the inflation of the economy by excluding volatile foods and energy prices, which of course offers insight into the overall price trends. And this leads to if there is a rise in this event, in this data, we expect to see a tighter monetary policy when the Fed is going to be deciding on the interest rate for the following month. Now, from the data we have here, we have 3.7% for the month of for the last quarter, and we have a consensus projecting 2.5%. So it's a little bit to the lower side. So that means there has been a that means that there is the anticipation of a contraction in that sector. So we are going to be looking forward to see what the actual data is going to be on that one. Then going forward here, we have the durable goods order in all its ramifications, which is a measure which measures the cost of orders received by manufacturers for durable goods order, which means goods planned to last for 3 years or more, such as vehicles and electrical appliances and the likes. And from what we have here, the consensus here is projecting, okay, for instance, for the one excluding defense, we have a consensus. We do not have any consensus yet, but for the one for transportation, we have a consensus projecting something lower than the previous data. And then we also have the gross domestic product annualized for quarter 3, which is a very high impactful event that everyone will be looking forward to. And what this event gives us is it gives us an insight into the overall health situation of the U.S. economy, hereby impacting investor sentiment and influencing trading decisions. Now, this event here is one that everyone will definitely be looking forward to. And from what we have from this, from the data we have here, we have economists projecting a 4.2% expansion in the U.S. economy, which is quite a phenomenal feat if this is what is going to happen, especially if we compare it with the previous one, which came in at 2.1% expansion. And if this is something to come by, then we might likely be seeing the dollar skyrocket one more time, as we have been noticing here in the last 24-48 hours how the dollar have gained so much traction. Then later on today, we are going to be having speeches coming in from Christopher Wallace, who is one of the representative of the Federal Reserve, who is going to be giving a speech in about 4, 5, 6 hours from now, and everyone will definitely be looking forward to that one. Then we also have Conlive John, who is the Deputy Governor for Financial Stability of the Bank of England. So this is coming in from the United Kingdom. Is going to be having a speech later today, and we of course want to see what he will be saying, as whatever he says will be providing us an insight into their central bank's outlook, the economic situation, and potential policy shifts, and of course interest rate decisions, which would be happening later next month. So these are the events we are going to be looking forward to, and the timing too is also very, very important, as during the time, probably a couple of hours into the event, we will gradually see some anticipation of that event, which would reflect on the chart as price action. And as technical traders, what we want to be doing now is to go into the chart and look out for structures and patterns that we are going to be using to guide our trading decisions for today's trading session. So with that being said here, let's dive right into the business. And before I do, I can see your comment. Jonah Haruna, good morning to you and glad to have you around with us this morning. I trust you had a wonderful night or day out there. So welcome on board, Jonah. All right, so with that being said here, we will be moving into the first asset on our watch list today, which is, of course, the USOILSPOT. And what quite an interesting situation we have going on right now in this market, which requires a lot of patience for us to be able to be on standby to capitalize on the next move. Now, since the beginning of this week, we have been selling the USOILSPOT. In fact, we were able to scoop in over 200 pips in the last couple of days after incurring a loss at the beginning of the week. So let's run through how the week started for us in this community. Now, as a reminder for those who are new with us in this community, let me state here that basically what we do here is to deliberate on the 1 hour time frame, which is our execution time frame. Now, if you do want to have a background knowledge of how we got to this point, then it is necessary for you to watch my previous videos on this asset we are looking at, so that you can see how we were able to identify the key levels that we agreed to use to guide our trading decisions for this week, the trend lines and the major patterns we saw on the higher time frame. The links are right in the description box below, so you can check them out after the live session so that you can have a better idea of how we got to this point. And secondly, it will also serve as an educational tool to help you in understanding how to use price action to identify potential trading opportunities. So with that being said, let's dive right into the structure. So right here on the 1 hour time frame, we initially identified our key level for this week, which was situated along the $87.50 area. And in fact, this level had played a major role in determining the direction of price action in the last couple of months, making it a very crucial zone for us to look out for. And you know how we use our key levels in this community. As long as price remains but below the key level, we want to be looking out for patterns and structures that support the idea of selling the asset. However, if price breaks above the key level, we want to be looking out for structures and market conditions that support the idea of buying an asset. Now, if you look at what happened here at the beginning of the week, it was more of a consolidation phase as price action was oscillating just right around that key level, hereby confined within the $87.60 level and the $86.60 area to give us an insight into the level of indecision at that particular point in time. And because of this, you know how we use our flat channels whenever we identify such structures. We exercise patience and wait for either a breakout of the resistance line or the breakdown of the support line to give us an opportunity to either buy or sell. And now this led to the scenario we witnessed at the beginning of the week as we saw price broke out of our key level to the upside, which we took advantage of. Of course, price moved about 35-40 pips in our favor before sellers came in to take us out of that position in a loss. And lucky enough for us, we were positioned below the support line as we saw price broke down the structure, giving us our first sell position for the week. And since then, we have been selling the USOILSPOT. Now, a couple of days ago, we also identified another beautiful setup after placing our stop losses on all sell positions above the $86 area, giving us another opportunity to sell as soon as price broke down the support line of the second range too as well to push price further to the downside. So it was quite a very interesting sell setup as we rode that momentum all the way into the $83 level, moving our stop losses accordingly. And of course, we were taken out yesterday with over 200 pips in profit. And for those of us who were part of that positions, well done and kudos to you for being on standby to capitalize on that move. Now, during our live session yesterday, remember that we had a very beautiful setup that we said we will be using to guide our trading decisions for yesterday's trading session, as we saw price confined within that range between the $83.82 level and the $83 area to emphasize the level of indecision in this market at this point. And one of the things we were looking at yesterday is the likelihood of a downtrend continuation pattern if it so happens that price takes out all the buy positions around the $83 area to incite a bearish move. And in fact, we indeed saw the breakdown of the $83 area happen as we saw price action move over 70 pips in our favor before the buy pressure came in to take us out of that position. And if you had moved your stop losses accordingly, you must have been taken out at break even on that third position. So we saw what happened here. Price action kept on going to the upside, breaking out of the $83 level, retested the structure on our lower time frame to give us an opportunity to join an uptrend move. And since then, price had moved over 150 pips move into that crucial zone that we identified during the live session yesterday. Now, if you recall vividly what we talked about here yesterday, we said something about that area between the $85 level and the $85.50 area, which had played a major role in negating selling pressure before it was finally broken to the downside right here on Tuesday's trading session. And one of the things we agreed here in this community yesterday is that when price breakdown of a key structure or key zone such as what we have here, we expect that some point in time price may come back into that structure. And if you remember vividly, I made mention that as soon as price comes into the zone, we do want to be moving our stop losses, secure the current position while we wait and see how the market will react to that zone, whether we are going to be adding more buy position or getting ready to sell, depending on how participants react to that zone. And one of the things we mentioned here yesterday is that if price continue to find selling pressure within the zone, we might likely be seeing price action drop to the downside. However, if price breaks out of the structure to the upside, then we are back within the buyer's territory, which you can see since last week it has been a level where buyers have gathered to push price to the upside. And with the way things are going right now, you will see that in the last how many hours now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours now, we have been noticing selling pressure around that area. Now, the question going into today's trading session is how far will this bearish momentum go? Is it going to be a bearish momentum for us, or are we likely going to be seeing a breakout of the structure? And for those of us who are with me on my Trading View and Telegram platform, you must have gotten an update as to how we are going to be managing this position here. And one of the things I said here yesterday in my commentary is as regards to the economic sentiment as regards to what happened yesterday, as we saw the Energy Information Administration in the US, of course, released the US crude inventory for the previous week. And in fact, it was a surprising data as we saw a rise of about 1.4 million barrel compared to the 421,000 which was published the previous week, which gives us a sign of a reduction in the demand for oil within the US community. And if there is going to be a reduction in the demand for oil, the chances of price action dropping to the downside increases. Now, if we also take into consideration the escalating tension in the Middle East at this point in time, where Israelis are on ground already to launch an attack in Gaza, and considering that territory where it is known to be the area where oil supply comes from, there is also this fear that this could also affect the oil global supply too as well. And if this persists, we might likely be seeing a downtrend. Now, if we are going to be looking at things from a technical standpoint at this juncture, well, personally, my own center of focus today is basically going to be within that $85 area and the $85.50 level, where I do want to be seeing how the market will be reacting to the structure. Now, for those of us who are bought at the breakout of the $83.82 level, please kindly move your stop loss maybe to your worst case scenario, your entry point, and let's see how the market really is going to be reacting to the zone. Now let's zoom right into the structure, as this is where our center of focus will be. Now if you look at what has been going on since price action came into the zone, you will see that we have this area at the $85.25 zone. In fact, I would like to give this a different color to emphasize its importance, as this is going to be what we are going to be looking at for this week. So what color should I give it? Let me give it a golden, an orange color, golden color maybe, and let's have it labeled as the $85.30 level. So we have the $85.30 level marked out as our new resistant line for today. And then I will give this a golden color too as well. Then we also have this range right here. Let's see. Okay, falls exactly around the $84.85 area. So we do want to be marking this one out on our chart right now. $84.85 level. All right. Now place it at the bottom, and here we go. So now we have a range which has been persistent with selling pressure throughout the later part of the New York session, strike right into the early hours of today, as you will see here. Now remember that this area was an area that was broken down off during the Tuesday's trading session, and from a technical standpoint, we did talk about the potential of price coming into the zone to retest it and incite a downtrend scenario. Now that we have been noticing selling pressure around that area, this is where our center of focus will be. Now, if you are taking advantage of the breakdown retest of the $84.85 level, well done to you. That's a very good sign that you really do understand the current structure that we are in right now. So if you have done that, let's see how the market will play out from this point. However, if you had missed out on that one, then probably you do want to be positioning yourself right below here at the $84.35 area, which you can see we have been noticing some buy pressure around this area in the last couple of hours. So we do want to be marking that level out as well. So $84.38 area, where we shall be waiting for another breakdown retest of that structure to incite more selling opportunities at this point. So everything is looking bearish around this area, as buyers are finding it difficult to break out of that $85.50, $85 area. Now, if price continues to drop, then we do want to be having multiple entries, breakdown of the $83.82 level. If price continues to drop to the downside, we have the $83 area, which we shall also be using to maximize the bearish momentum at this point in time. However, Now, there is a caveat to the sell position here. Now, if price drops and gets back into the $83.82 area, that is this level here, remember we saw the breakout of the structure. Price will likely come back to retest it to incite an uptrend. So what I will advise you to do here is, as soon as price gets into the $83.82 zone, kindly move your stop losses, secure the current sell position, and let's see how the market will react to that zone. And if price breaks down, retest that structure, we'll look out for more selling opportunities at that point. But trust me, I will be with you in the comment section to give you updates as at when due. However, in as much as we're looking out for selling opportunities, we cannot ignore the potential that buyers too can also come in here. Now, with the way things are going here, as we have marked out the zone between the $85.30 area and the $84.85 level, there are still chances that buyers could break out of the resistant line of this range to incite an uptrend scenario. Now, we cannot ignore that possibility. Now, if that happens, price breaks out of the structure, then we are going to be back within the buyer's territory. Remember, this area was a temporary demand zone at the since last week Thursday, remember, before price broke down the structure. And if price will climb back above that level or zone, then we are back within the buyer's territory. And if this happens, I do want to see patterns that will support an uptrend situation, like a retest of structure, continued by pressure on our lower time frame. That is, sellers are finding it difficult to break back down the $85.30 level for us to join an uptrend move. So that is the only condition here that will make us want to consider buying the US oil spot for today. So let's see how the market will play out from this area. And trust me, I'm going to be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. If you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. And as usual, I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next asset. So next 10 to 15 seconds, and you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I do want to assume that we are all on the same page, and all I've said so far is quite explanatory. But if you still have any, please drop them in the comment section. So in that regard, permit me to move on to the next financial asset on our watch list for today. So the next asset on our watch list for today is the cable, that is the GBPUSD. And in fact, I'm very happy for those of us who took the counter trend opportunity a couple of days ago, as we saw price action continue to nosedive all the way to the downside. And in fact, it's quite a very interesting bearish momentum we saw here. And this is connected to the rising US bond yields, which was observed during the trading sessions yesterday. In fact, this has been building up prior to yesterday's trading session. And of course, the continued escalating tension in the Middle East, as majority will prefer to even put their money in the US dollar as against the pound sterling at this point in time. And this is really affecting the pound sterling presently. Now, if we also take into consideration the economic situation in the United Kingdom, the high interest rate is really affecting the economy, as we've seen a rise in layoffs. It's very difficult for credit facilities at this point in time for business owners to run their businesses because of the high interest rate, and this is really hampering the economy. And there one that tops it most is the fact that the next interest rate decision is coming up next month, and it's very likely that the Bank of England will be increasing interest rate, as the majority in the market are suggesting, are proposing an unchanged situation as regards to the interest rate. And if there is not going to be interest rate, definitely it looks less attractive for investors to put their funds in the market. However, we are going to be looking at things from a technical standpoint to see what the psychology of the price movement really is at this point in time. Now, let's dive right into the chart and let's look at how we started the week on the GBP USD. Now, remember that we were actually profitable at the beginning of the week, as we were able to scoop in over 200 pips from two buy positions at the start of the week. Now, look at what happened here at the beginning of the week. We saw price was initially confined within a range here between the 1.216600 level and the 1.214500 area. And now, while we also identified that range, remember that we acknowledged that price action was sitting above a very robust demand zone on our higher time frame. So if you had not watched my video on the GBP USD, please do, as you will get to understand how we were able to mark this zone out based on what we saw on the higher time frame. And because of the inability of sellers to break through the structure in the last couple of weeks in this market, it was more likely that price will continue to the upside. And one of the other parameters we were looking at was the breakout of this descending trend line, which will finally negate that this trend line may no longer have the capacity to continue to negate the bullish attempt here. And interesting enough, at the beginning of this week, we saw how price broke out of both the descending trend line and, of course, that resistant level of that flat channel at the 1.22600 level, retested it a couple of times to inside that bullish opportunity, which we took advantage of. Now, we also added more positions at the breakout of the 1.218 as we rode that move all the way into the 1.212280 area before this bearish momentum began. And for those of us who are part of our live session on Monday, I made mention that we should move all stop losses to that area around the 1.22450 level, which we saw how price took us out of that position with a considerable amount of profit on both two positions. And remember, I made mention here that I was still looking forward to more buying opportunities in this market based on the impulsive move that started this week. As you will see here, I was looking at a potential move into this area to incite an uptrend scenario, or probably come back into the structure to incite an uptrend move. And as a result of this expectation, I told you I wasn't going to be selling the GBP USD at the breakdown of that ascending trend line here and the 1.22450 area. But I also mentioned that for those of us who are scalpers or counter trend traders, you might want to capitalize on the breakdown retest of that structure, which was exactly what happened. As you saw here, price broke down, retested, and since that moment, price has been dropping to the downside. So for those of us who had sold right, took that counter trend opportunity, you will definitely be in a massive profit like right now, as you will be running with about 160 pips in profit on that one. Now, during our live session yesterday, we had the privilege of joining the bearish momentum after we identified a simple setup to guide our trading decision. And what we saw here yesterday, I told you that our center of focus is going to be between the 1.21800 area and the 1.21450, where depending on the direction of the breakout, we will be joining that move. And I said here that we might likely be seeing price break out of the 1.218, which will be the only condition for me to buy the GBPUSD, which of course never happened. As we saw instead, price dropped below the 1.21450 to trigger another sell position, especially for those who had been selling prior to the identification of the setup. However, for those of us who missed out on the counter trend opportunity on Tuesday, I hope we were able to be part of this one, as I personally joined this move. And if you missed out, in fact, the market came back to retest the structure, and since then price has been dropping to the downside. Now, for those of us who joined this one right here, you will currently be running with about 64 pips in profit at this point in time. So well done to you for being on standby to capitalize on that one. Now, the next thing we want to be doing at this juncture, you all know how we do it when price moves very well in our favor, is to move all stop losses and secure the current sell position. And at this point in time, I will be suggesting, while we also keep in mind that we do want to be giving enough room for price action to breed, we want to be moving all stop losses to that area around the previous structure, which is between around that 1.211 area. Anywhere around there seems most appropriate to move your stop losses to. Let's see how the market is going to be reacting to this area to decide what our next line of action will be. Now, with a well-secured position at this point, what is going to be our next line of action for today? What are our plans? Are we going to continue seeing price drop to the downside, or is there chances that price will climb back up and start another wave of bullish momentum? Now, let's look at the structure from a technical standpoint, and remember that we are looking forward to the GDP data, which is coming up in about four hours from now. And from what we saw in the GDP data, it reveals that economists are projecting a 4.2% expansion compared to the 2.4% expansion for the previous quarter, which is a very, very phenomenal figure if that is what will happen. And in that regard, it also gives us an insight into how strong and resilient the US economy is. Now, in that regard, we might likely be seeing price drop to the downside, but it's not all the time that the market reacts to such data, as there could be some other parameters on the chart which we also want to be taking into consideration, especially the technical aspect, to make a decision for today. Now, let's look at this from a technical standpoint. Now, if we go to the higher time frame, for the benefit of doubt and for the sake of clarity, I would like to show you something we saw at the beginning of the week right here on the 4 hours time frame. Now, if you look at the 4 hours time frame here, you would agree with me that price action is back into a strong demand zone, which was identified at the beginning of the week, just around the 1.2100 level and the 1.20500 area, which has been an area where sellers have found it difficult to break through the structure since the last week of last month. And because of the fact that we are within a strong demand zone here, we need to be very, very careful, as buyers could still come in again. As you know, in the last 3-4 weeks now, the market participants have found the 1.21, 1.205 area cheap enough to buy the pound sterling. And because of this memory, we might still see some buy pressure resume around this area. Now, let's look at what is going on here. Now, besides that demand zone here, remember that we also identified a technical pattern during the exclusive live session yesterday. Let me show you what I'm talking about. So if we consider this impulsive move down into the zone, you will see we have some higher lows here, giving us that ascending trend line, and we also have some lower highs here giving us something that looks like a wedge. Of course, look at the impulsive move all the way into that area. And whenever we identify this kind of pattern on the chart, it's a clear sign that we are likely going to the downside, because theoretically this kind of pattern is seen to be a downtrend continuation pattern. And if you look at what has been going on here in the last 16 hours, you will see that price had already broken down that support line, bringing us back into that demand zone. Now, one of the things I'm going to be looking at today is the possibilities of buy pressure resuming, because it's a demand zone, as majority will want to start buying at some point. Then price may come back into that structure to retest it, and continued selling pressure around here has a higher chance of pushing price further to the downside. And in fact, if price will break this psychological level at the $1.2 zone, I'm of the opinion that price will really crash massively to the downside. So this is how we are going to be looking at this for today. So if buy pressure resumes within this zone, it might come back to retest the trend line, where continued selling pressure will incite a downtrend scenario. However, if price breaks above that trend line and climbs above the structure, and we begin to see continued buy pressure above this area, then I'm of the opinion that because of the fact that we are sitting on a robust demand zone, we are likely going to be seeing an uptrend. And if price goes on to break out of the 1.218, we'll look out to add more buy positions. And a further breakout of this descending trend line, will be welcoming more buy position. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. But at this point in time, my advice here is that let's exercise patience. For those of us who are in a sell position, move your stop losses accordingly. Let's see how the market will be anticipating the GDP data. We will begin to see some signs like 30, 45 minutes into the GDP data, and then we'll see what we are going to be doing after that. And I will definitely let you know in the comment section of both my Trading View and Telegram platform. So if you have any questions, these are my views. If you have any questions whatsoever as regards to my explanations or as regards to the current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can use that time as well to mark out these levels on your charts, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, I see your comment, Fred. Good morning to you. Thanks for the compliment. I'll take that as a compliment, of course. Thank you very much. And I'm very glad to have you around with us this morning. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move right in to the last asset on our watch list for today. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And finally, we are beginning to see some traction in favor of the US dollar, despite the strong US Treasury yield going on in the market right now. So despite that strong US bonds, we still see majority prefer to put their money on the safe haven gold asset. Now, for those of us who are with me on my TradingView and Telegram platform, I shared a commentary this morning as I told you all that the surge in demand for safe haven of the gold overshadowed the impact of the rising US Treasury bond, which we saw gain some momentum in the last 36 hours, and has typically dampened the non-yielding precious metal. Now, after a period of volatility yesterday, remember we saw some volatility happen in the market yesterday. For those of us who are part of the XAUUSD live window, I do usually give comments on the trading plan on the left hand side of your screen. We were taken out of the buy position at some point in time. I told us all to be back again as we are still looking forward to bullish expectations in the market as long as price action still remains above that ascending trend line that has been supporting the bullish momentum since the beginning of this month. Now, before we go into the details here, let's quickly run through how the week has started on the XAUUSD. What has really been happening? Remember that prior to yesterday's trading session, we really had not had anything significant, which is very, very unusual on the gold spots, especially during the second half. During the midweek, usually during the midweek, we usually will have been rolling in with at least a minimum of 100 pips, but in this case scenario we were in a loss at the beginning of the week. Remember, after we took advantage of that buy position, had the breakout of the 1978, and we had our position running in a loss most of the time, and not until Tuesday's trading session we were finally taken out of that buy position in a loss. Then we also had the attempt of selling at some point on Tuesday. Remember, we sold the breakdown of the 1965 area, which we saw. I made an update that we moved our stop loss. Price moved about 80 pips in our favor. Okay, about 100 pips. We moved our stop loss accordingly. We were taken out of that position. And the appearance of this hammer candle, which technically is considered as a bullish sign, revealed that sellers are finding it or are struggling around the zone. And because of this information, we were still holding on to a bullish bias despite this consolidation phase we have here. Now, despite the higher yield in the US Treasury, we can see that the gold is still gaining some momentum, and this could be as a result of the Middle East tension which is currently going on right now, and we don't know if the Israeli government is going to yield into the pressure from the International Committee to allow aids and the likes to enter into Gaza to help the people in that region. If that happens, we might likely be seeing a downtrend. But at this point in time, I still feel that majority will feel comfortable placing their money in the gold. Now, technically, let's look at the structure and dissect what we are going to be doing for today. Now, I didn't mention, okay, let me talk about how we are going to be securing our position at this point. I didn't mention that. Sorry about that. So, yesterday we were able to buy. During our live session yesterday, we had a couple of parameters which we said we were going to be using to guide our trading decisions. One of them is the range that is between the $1,978.50 level and the 1965 area. That was our range that we are looking at yesterday. We were looking forward to break out of the range to give us a sense of direction of where price is likely going. Then in addition to that range are a couple of trend lines we had here. Remember that we had this descending trend line which projected the nature of sellers since the beginning of the week. As you will see, we had a uniform and consistent lower highs which was connected to give us that trend line, of course. Then we also had this ascending trend line which has been supporting the bullish momentum since the beginning of this month. And of course, we agreed here yesterday that the only condition that will make us sell the XAUUSD is for price to break down both the ascending trend line and the 1965 level with a confirmation retest of structure before we want to be joining a downtrend move. And of course, that never happened. So that negated that idea of looking out for selling opportunities. Now, we saw the breakout of this descending trend line around the $1,973.40 level, which I obviously gave us on during my XAUUSD live window yesterday, that we want to be buying the breakout of both that level and the descending trend line to join an uptrend move, and we bought right there. Then we also added more positions at the breakout of the $1,978.50 level, added more positions at the breakout of the $1,985, and right now we also have another breakout of the 1,990 area, as price action is still struggling to gain more momentum at this point in time. And for those of us who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, at this point in time, I will be advising you to move all stop losses. Let's secure the current buy position, and all stop losses on buy position should be anywhere below the 1,985. And remember that while we are trying to place our stop losses, we do want to give enough room for price action to breed. And one thing we should also note here is that there could be some volatility happen today. Remember, we are looking forward to the GDP data, which is one major event everyone is looking forward to. So if it favors the US dollar, we might likely be seeing a crash, maybe back into the ascending trend line that started this month, or even break down that ascending trend line. Now, with a well-secured position at this juncture, what is going to be our next line of action? Do buyers still have a say in this market, or are there chances that sellers could come in anytime soon? Now, like I said yesterday, the first condition here from a technical standpoint is that ascending trend line since the beginning of this month. Now, since the beginning of this month, price had consistently found higher lows, giving us this beautiful trend line after connecting it to emphasize the strength of the buyers here. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above that ascending trend line, we shall feel very comfortable in our buy position, and of course look out for more buying opportunities. Now, for the fact that price still remains above that ascending trend line, let's feel very comfortable in our buy position. We've moved our stop losses accordingly. Now, our center of focus for today's trading session is going to be around that psychological level at the $1,990 zone. Now, this is the highest point price action has been for this week. Now, prices at this point in time showing us signs that buyers are getting stronger by the day. And if price remains above this 1,990, this could be a platform to push price further to the upside. And if price is going to go further to the upside, we have another level that we are going to be using to maximize the next buying opportunity, which is situated along the, let's see, 1,997 area, another psychological level we want to be looking out for more buying opportunity. As you will see that this level here, we saw selling pressure resume around this area last week Friday, and if price can break out of that structure, we definitely want to be adding more buy position here. Now, in addition to that, we need to connect the series of higher lows here. Since last week, since Tuesday, of course, we have seen higher lows here. So if we bring out our line chart and connect the series of higher lows, we should have something like this to work with for today's trading session. So let me do this correctly, and I want to reduce the pixel here to 2 and make it a dash or dotted line, whichever suits my eye. All right, so we have a beautiful ascending trend line here, and I want to bring out my candle chart so that we can do some little adjustment to ensure that it touches all the majority of the pivot lows as we have here. So this ascending trend line here is going to be playing a major role in determining the direction of price action today. And don't forget that we have the major trend line which has been supporting the bullish momentum since the beginning of the month. So I just thinking that a little further so that it will emphasize the importance of that ascending trend line. So as long as price remains above this ascending trend line, we shall feel comfortable in our buy position. Then another thing here is our key level for this week, which is at the 1,985. Price action is back above that level again. Another good news for buyers in the community. So let's continue to hold on to this. If price still remains above the 1,985 and the ascending trend line, we still feel very comfortable in our buy position. And so don't let us panic. Even price, if we start seeing selling pressure, there is still a chance that price could retrace back into the 1,985 area, where the appearance of buy pressure could still incite more buying opportunity. So as long as we remain above the 1,985 and that ascending trend line, we shall feel very comfortable in this buy position. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers, and some volatility could still happen today based on the GDP data we are looking forward to, and this could likely lead to some bearish expectation too as well. And if we are going to be considering selling, what is it that we want to see on this chart that will make us consider selling? Well, the first thing here is for me to see price drop back below the 1,985. Remember, this is our key level for this week. And for those of you who have not watched my video on the XAUUSD, please try and watch it so you can see how we were able to identify this key level on the higher time frame. Now, you know how we use our key levels in this community. If price drops below the key level, we continue to look out for market conditions that will support selling. And if prices remains above the key level, we look out for market conditions that support buying. Now, if it so happens today, which I'm not sure if will happen, but if it so happens today price action breaks down the 1,985, then at this point I want to start considering selling. But remember that we are not going to be jumping into the sell position right away, as we will still wait for confirmations to happen, because the breakdown of the structure could still turn out to be a false breakout. And for the fact that price still remains above that major ascending trend line, which has been supporting the bullish momentum since the beginning of this month, will make it unlikely that sellers may continue that trend. But what we want to be doing as soon as the breakdown of the 1,985 happens is to wait for a significant confirmation that says that buyers are finding it difficult to climb above that ascent above that 1,985, and this would reflect on the chart as continuous selling pressure, maybe selling pressure like this, continuous structure, then price breaks down the ascending trend line to give us an opportunity to join the downtrend. So this is the only condition that will make us want to consider selling. And if you are with us during the XAUUSD live window during the New York session today, definitely you will be getting real-time updates on the trading journal on the left hand side of the screen during the XAUUSD live window. So this is my view here on the XAUUSD for today. I remain very bullish, and we continue to monitor price action, as our center of focus for today is between the 1,990 and the 1,985 area, where depending on how price reacts to the zone will determine how we are going to be going for today's trading session. So it's on this note I want to say I'm done on all the assets on our watch list for this week, and if you have questions, this is the right time for you to drop your inquiries in the comment section. So while I take some time to wait for your questions, I would like to inform you that I have dropped the XAUUSD live window, the link to the XAUUSD live window in the comment section, pinned at the top. So you do want to click on that link, click on the notify me button so that you can get notified as soon as we come online. Now, for those of us who don't know what the XAUUSD live window is all about, the XAUUSD live window is a platform which was born out of popular demand within this community, where everyone comes to monitor price action on the gold spot asset real time here on this platform. You see how we enter trade, you see how we anticipate the next position, you see how we secure positions and the like. So you do want to be part of that session, and let's keep the energy going on that platform. So it's on this note I would like to, I'm still waiting for questions because of the difference in the lag between my live streaming here and your reception over there. And that reminds me, if you have found this content helpful and useful in making your independent trading decisions for today's trading session, I really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. The like is the cheapest way you can actually support this project, and I really do appreciate your efforts in doing so. Thank you very much in advance. And for those who had liked so far, thank you very much. For those who have not liked yet, please click on the like button. It doesn't cost anything at all. Thank you very much. So I still wait for your comment. I'll take the next 5-10 seconds before I just round up for today's trading session. All right. So in the absence of no questions, I want to assume that we are all on the same page, and I encourage us all to exercise patience. I do hope you marked out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And don't allow impulsion or compulsions to decide your moves. Wait for structures to mature, and remember that you need to move your stop losses. Have a stop loss to guide and protect your position. Every decision we are making is only an educated guess until it finally hits our TP target or moves very well in our favor. So yes, on this note, I want to wish us all the best of luck. And for those of us who joined for the first time, I do hope you are able to gain one or two things from what we discussed here today. And I look forward to seeing more of you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come back here again to review how well these assets have been doing so far and get ready for the last trading day of the week, which promises to be an exciting one. So on this note, I wish us all the best of luck. Fred, I see your comment. Thank you very much, and glad to have you around with us. So I look forward to seeing more of you tomorrow too as well. So on this note, best of luck, everyone. See you during the XAUUSD live window, which will be kickstarting 5 to 10 minutes into the New York session. I look forward to see your comments in the comment section on both my TradingView and Telegram platform, on the XAUUSD live window, as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.